bank loan for your business? IRA options you must consider. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdBits. On today's podcast, we're going to explore options if you need a bank loan and are running into a brick wall. Can you tap into your IRA or even 401k? What are your options? And what led me to do some research on this topic and actually do a podcast is I've been reading and discussing this with a number of clients and then confirmed it with some friends that are actually bankers. And it is true, banks have now stricter loan standards for small businesses. It's certainly true. Whether you call it higher interest rates, bank fallout from the Silicon Valley Bank, First Republic, whatever the case may be, whoever you want to blame, bottom line is if you need a bank loan today, it's tougher than it was a year ago, 15, 20 months ago. No question. Here's a couple statistics that even if you are able to get a loan, some reasons why small businesses have turned away from loan options from banks. The median interest rates for a variable rate small business term loan was 7.44 in the fourth quarter. That last period for which data is available, that's up 3.42%. Okay. And it's only potentially going up if interest rates go up. So it's costing a lot more money to get access to money from the banks. Okay. 77% of small businesses said in April that they were concerned about their ability to access capital. This is according to a survey of 1,740 small businesses by Goldman Sachs. That's up from 23% a year earlier. Okay, so even if you're able to get a loan, you're going to have to go through stricter requirements. And number two, your interest rate's going to be a lot higher. Okay, so what else do you do, right? What are your options? If you are a small business and need money to buy inventory, pay your employees, finance growth, whatever the case may be, what do you do if you are running into a wall with a bank? Maybe it's your small bank in your community, you've had a great relationship for many years, and now suddenly your banker contact is saying, hey, we just can't do it. It's not a good time. Or we can do it, but you're going to pay 8, 9, 10% for your credit line, or you're going to have to pay off your credit line to get the loan. They're just making it more difficult. And we know money flowed during COVID and even prior to COVID. It was super easy to get money as a small business. What do you do? So the first thing people do is they're looking to equity investors, right? Saying, okay, forget about a loan. I'm going to raise money and sell stock in my business, sell ownership interest in my business. And instead of being a lender and a borrower relationship, I'm going to just give equity. They'll give me the money. I'll sell percentage of my business, and then I'll have the money to grow. That's obviously the first and most common approach. But what happens if you aren't interested in getting partners, right? What else can you do? Well, number two is retirement accounts, right? That is the biggest source of savings for most Americans, but $33 trillion of retirement wealth. In the United States, approximately $13 trillion of IRA wealth. Okay, so that is probably the second place people go to look to finance their business operations. But unfortunately, there's rules that dictate what we can and cannot do with IRA funds. So I'll start with IRA funds and then briefly jump into the 401k world. You can take IRA money out for any purpose, anytime you want. That's the good news. The bad news is it's a pre-tax IRA, traditional IRA, SEP or simple. If you take it out before 59 and a half years old, tax and 10% penalty. After 59 and a half years old, just tax. Okay, so if you need 200K from your IRA and the bank's going to charge you 9% or they're not giving you the money, maybe you don't have a choice. But if you do borrow, just note that you're going to pay, if you're under 59 and a half, tax on the 200K, whatever you borrow, plus the 10% early distribution on that amount. Now, how do you determine your tax rate? Well, you just add whatever you take as an IRA distribution. You add that to any income you've earned during the year on your 1040, and then based off the aggregate amount of net income, your tax rate will be based off that amount. Now, if you had a Roth IRA, you can pull out Roth IRA contributions anytime. So let's say over the last 20 years, you've contributed 100K to your Roth IRA. But now that 100K is actually turned into 600K of earnings, right? So you start with every year you put in 5K for 20 years, it's 100K. And that 100K now is worth 600K. So your Roth IRA is worth 600K. You can pull out the 100K anytime you want, okay, which is great. So you can pull that 100K, use that for a loan, or just take it and use it for your business. The remaining amount, the 500K, the earnings, if you take it out before 59.5 and the Roth being open at least 5 years, tax and 10% penalty on that amount. If it's over 59.5, just tax. So the contributions you put in, since they're after tax, you can pull that out anytime you want. The earnings on those contributions are still subject to that 59.5 and 5-year rule. Okay, so that's the second. The taxable distribution is probably the most common IRA approach. Second, you can do a 60-day distribution, right? Once a year, once every 12 months, you can take your IRA money and use it for any purpose. Okay, but you got to return those funds within 60 days. So if you have a short-term cash crunch issue, that could work. But if you're going to need the money for greater than 60 days, it's probably not going to be an option. Third is hardships. Hardship, you still have to pay tax on, but no 10% early distribution penalty. Hardships, you got to prove whether it's medical, financial, whether it's health. You'd have to prove that. The new Secure Act 2.0 has made it easier. So all it will save you is the 10% penalty. You still would have to pay income tax on the amount you take out. Unfortunately, you cannot borrow money from your own IRA like you could in a 401k. You can borrow money from friends and family, right? Let's say banks are closing their doors to you and you don't want equity investors. You can raise money and borrow money from friends, family, and also they can use their IRA. So you may have a situation where a friend or a family member doesn't have a lot of personal cash, but has some money in their IRA. You can say, hey, you can lend me that money in your IRA, and the interest I pay back will go back to your IRA without tax. Whereas if they did the loan with personal funds, the interest they got back would be subject to ordinary income tax. So actually, lending money out of an IRA is super tax advantageous. The next thing is something called a ROBS, a rollover business startup solution, which is not an IRA concept, it's a 401k concept, but it basically takes advantage of an exception in the tax code under 4975 D13 that lets a 401k, not an IRA, a 401k buy the stock, not the LLC interest, but the stock of the corp, and fund the business with the stock purchase. Now, you'd have to set up a corp if you don't have one. If you have an LLC, you'd have to set up a corp, and then you have to set up a 401k. The ROBS works really well if you're buying a new business and you have no employees. If it's an existing business, the ROB gets a little bit chunky, a little bit difficult to work with because you have to start offering benefits to your employees. If you're issuing shares, you'd have to issue it not just to your account, but also to all employees that are eligible. And since the business is operational, you're going to have employees. It gets messy. It's not easy. It's not simple. Possible, but it's not simple. The advantage of the ROBS is you can use the 401k funds to fund the business and earn a salary, and you don't have to worry about the IRS prohibited transaction rules because you are availing yourself of an exemption under 4975D to the 4975C prohibited transactions. And then the final is the 401k loan. So what you can do is set up a 401k for your business, roll your IRA funds into the 401k tax-free, and then borrow $50,000 or 50% of your value, whatever's less. So the cap is 50K. If you have 40K in your 401k, you can only borrow 20K. If you have 200K in your 401k, you can only borrow 50. So the loan option's good, but it's capped at 50K. Now, if it's you and a spouse, that will give you 100K if you each have at least 100K in your 401k. So those are pretty much the ways to tap in to your IRA or 401k if you're getting the cold shoulder from a bank. So just to recap, banks don't want to lend you money or the interest rates are too high. Number one, you can try to get equity investors, raise money from friends and family, or hire a business broker or investment bank to help raise the money, or go get a venture capital fund to buy equity in your interest, buy equity in your business. And instead of being a lender, they're going to just be an investor, and then you'll have the cash for your operations. Number two, taxable distributions in an IRA is super simple. Remember the 59.5 rule, 10% penalty in tax if you're under 59.5. Just tax if you're over 59.5. The Roth, contributions can be pulled out any time. The earnings on the contributions, which is what probably will make up most of your Roth IRA value, you can only pull it out tax-free if you're over 59.5, and the Roth's been open 5 years. Hardship distributions will only save you the 10% penalty. 60-day rollover will work once every 12 months, but you'll only have access to those funds within 60 days. You'll have to return them within 60 days. If you fail to return them within the 60 days, you'll be subject to tax. And if you're under 59.5, a 10% penalty on the amount distributed. Robs, but you need a corp and a 401k, and it gets a little bit cumbersome if you have an existing business that's an LLC with employees. So just remember, that would give you the ability to use your 401k or do an IRA rollover into a 401k. Only pre-tax IRAs can be rolled into a 401k, not a Roth. So just remember that. But if you did do that, let's say you had a business, just you and your spouse, you need 200K, can't get it from a bank. If you had a C Corp, we just set up a 401k, you roll your IRA to the Corp. So you set up a 401k for the Corp, you roll your IRA tax-free to the 401k, 401k buys stock in the Corp for value, 401k will own part of the business, 200K is in the business, and now you're partners with your 401k. That's the perfect scenario. It gets more cumbersome if you have an LLC, because then you have to set up a new 401k, contribute assets, it becomes difficult. Or if you have lots of employees, and when the 401k buys the corporate stock, you have to give all employees the same ability to buy the shares as your 401k account. So that also becomes kind of messy. And then ultimately the 401k loan option, if you're self-employed, solo 401k is a great option. If you have employees, that's cool too. You can set up a 401k and do a loan, but that's going to only give you $50,000 or 50% of your account value, whatever's less. Okay, so you are going to be limited. Otherwise, that's it. Those are really the options if you need cash and the banks aren't being cooperative. The retirement account option is probably, I'd say that's the first thing most people consider. A lot of businesses just aren't in a position to raise capital from equity investors, whether it's institutional or private equity, venture capital, or just friends and family. It gets messy, it's long, you got lawyers involved. So a lot of people just go right to the IRA world, and that's cool, or the 401k world. But remember, there's rules and restrictions, which is the point of today's podcast. So thank you very much for hanging out with me today. I hope you guys enjoyed the podcast. If you're watching on YouTube, appreciate it. Please leave a comment, question. I love hearing from you guys. So I will do my best to get back to you ASAP. Otherwise, have an amazing, amazing rest of your day, and take care.